and gentlemen, welcome. My name is Peter Oluoch. I'm a stock market researcher and investor. I talk to people about the stock market. I guide them to save, I guide them to invest, I guide them to grow their money. My aim is very simple, to create 10,000 millionaires. Have a group of people who are rich, mentor people in the investment field. Help them save, help them invest, help them grow money. If we don't save, if we don't invest, if we don't grow money, we run the risk of being poor. 90% of those working today will be poor according to Retirement Benefits Authority. The statistics is very bad, and hence we have a race against time. If we are to make it, we must learn to grow our money quickly. And today's topic is this: the investment mistakes we make. Investment mistakes we make. Mistake number one, not having a goal. If you don't have a goal, you will not know where you are going. A goal is your compass direction. It gives you direction, tells you where to go. If you have a soccer game or a soccer match and there are no goalposts, how will you know who is the better player? How will you know which team is better than the other one? We need a goal. We need goalposts to help us know, help us weigh this team is better than the other one and this team is not. So you need a goal. The main reason you need a goal is simple: to guide you. Personally, I have a goal to save, invest, grow rich, and I have a goal that I'm aiming at. Let's say 10 million, 20 million, for example. Once I attain that million goal, I quit. There are better things to do than staying in a 5 to 10 a.m. job. The second mistake investors make is this: having no records. You need to keep clean records. I bought share A at 5 shillings and share A went up to 10 shillings. So how much profit did I make? 10 shillings profit or 5 shillings profit. I bought share B at 10 shillings. It went up to 12 shillings and I got my 2 shillings profit. You need to have records of how you are performing. Records is very, 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 very important. The second thing you need to do is avoid greed. Greed will kill you in the stock market. I tell people this: make 10%, go. Make 20%, sell. Make 30%, sell. If you want to make 40%, it is very risky. If you want to make 50% in 1 month, in one stock, because the stock is going up very quickly, it is very risky. The stock can just make about turn all of a sudden, very quickly, and you lose your money. Ladies and gentlemen, we must tame greed. How do we do it? By targeting 10%, very little amount. Just target 10%, sell. 20%, sell. 30%, sell. Don't target 40% in one stock. It gets very risky. The other mistake that we do is following amateurs. The reason I started this channel is to be able to equip people with knowledge. But do you know how people invest? So people invest because their grandmother told them so, or their mother told them so, or someone from their church told them so, or they heard rumors from the chama, or they heard somebody say. Following financial amateurs will ruin you. The other thing you need to avoid is if you make a mistake and buy a stock at the wrong point and the stock goes down, please sell. Just have a small loss. But if you keep that stock for long periods, and it keeps going down and down and down and down and down, there's one thing that can happen. Stocks can go to zero. I have seen Mumias. Mumias was about 60 shillings. Mumias dropped from 60 shillings to 55, to 50, to 45, to 40, to 35, to 30, to 20, to 10, to 1, to 0. At River Mining, the same. ARM. It was 95, reduced to 90, reduced to 80, reduced to 70, reduced to 50. reduced to 40, reduced to 30, to 20, to 10, to 1. Not 1, it reached about 5 shillings. Then it was delisted. Kenya Airways the same. So was for 147, reduced to 100, to 50, to 0. 1 shilling actually. So if you make a mistake that your prediction was wrong and you have a 5% loss, please sell. Don't allow losses to go more than 10% because you never know. The stock can reduce and your money can be wiped out suddenly. Let me read for you a portion. I'm reading this book. I'm getting this wisdom from Marshall Loeb. He was a former editor of Fortune magazine by the writing of this book. These are the mistakes that Marshall Loeb says we should avoid. He's asking, what is your goal? For example, are you saving for a college tuition or future security? A necessary first step is to accomplish your goal is to estimate just what you want your money to do and how much you will need to do it. The next step is to figure out how much you must put away each week, each month to reach your goal. The second mistake, and he says that people make, is failure to follow through your financial goal. If you don't follow through your financial goal, that is another mistake. The cost of not making investment moves immediately can add up. So that after check of your personal finances, you decide to shift your money from your low-paying savings account to high-paying accounts or treasury bills in this case. The third one, he says, a failure to get records straight. So ladies and gentlemen, those are the mistakes that you should avoid to help you reach your financial goal. If you're new to this channel, subscribe. If you're not in our Telegram group, please join Telegram group. That's why we discuss the stock market 24/7. Asanteni sana. Bye-bye.